Welcome back to Trading 360. I'm Nicole Petalides live in New York City. Thanks for being with us. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Mike Shorr, Director of Trading Education at Prosper Trading Academy. Thank you both for being with us. So let's start with PepsiCo. I know this is one that you want to kick it off with. What's on your mind here when you take a look, Mike, at PepsiCo?
Yeah, two things. First off, thanks for having me. But 2 things in Pepsi. One, technically it's coming up to resistance. And then the second is, if you're looking for plays for Russia, Pepsi is actually a really big player over in Russia, and it's their second biggest market next to Mexico outside the United States. So if you're looking for a company that could be under pressure because of increasing stuff that happens over in Russia, that would be a play. So it would be a standalone even without Russia, but I like it when you fold that into it too.
So some bearish momentum that you're talking about. Ben, when you take a look at the Pepsi chart here at 162, what are you thinking?
Hey, good morning, Nicole. Good morning, Mike. I mean, it looks like it's lost some of its fizz recently. A little bit flat, I guess, is the best way of putting it. And as Mike explains, I think that's probably a good reason why we've seen some of the price activity come off after we double topped end of January, beginning of February up around the 177 level. I want to dive into the charts, but I don't want to spend too much time here in terms of the intermediate because I think the daily and the weekly are a little bit more interesting here. And Nicole, you know that one of the things we've been trying to point out is stock shares that have taken out the January lows versus those that haven't. And in this instance, PepsiCo is definitely one of the stocks, one of the names that has taken out the January lows. But I think in this instance, the DC lows might be a little bit more important. So here again, the hourly, I just want to point out that double top that we saw. We're talking end of January, beginning of February. And then next, I wanted you to take a look here at the daily time frame. And here you can see we've taken out the January lows, so well below that level. But here's the December low. This lies down around 158. And I think 158 is key for a couple reasons. For one, after the gap up that we saw back in July, if you remember, we went a bit sideways right around that 155 area, but that's the upper extreme of the range that we were in prior to breaking out into last fall and the run-up that we saw again to 177. So that's a key area right now as we pull back. You're going to want to hold above that. It also coincides, as I mentioned, with the December low. But let's take a step back and also take a look at the weekly time frame. I just wanted to point out 4 in a row to the downside, 5 of the last 6 to the downside. And as we take a step back into that daily time frame again, but this time bringing some moving averages, we're below the 50-day moving average. Look where the 200-day moving average lies, just above, again, that 158 level that we talked about. But RSI has been coming off. This is on pretty good volume here as well. So there's been some participation to the downside. Again, it just looks like investors have backed away from PepsiCo, but still holding the December lows. I think that's a key area to watch if you're talking about this momentum to the downside.
You watching those same levels, Mike? What do you think?
Yeah, that's exactly that 158 level. The issue with my trade is that they only have $5 wide strikes going out more than a couple weeks. So instead of targeting 160, I'm going to be looking at 155, not necessarily thinking it's going to get there, but the trade should still perform if we get that down to that area.
Yeah, tell me about the protection that you think this trade brings, Mike.
Well, it gives, obviously downside protection into the default position that most people have is going to be
right
to the long side, but without having to actually have the capital or the stomach to short a stock. This is limited risk with, I think, pretty good potential reward. So good to hedge against Russia, good to hedge against other things. Remember that we couldn't sleep at night, 2 weeks ago because of the Fed. Now nobody even talks about it. That hasn't gone away.
And I think we're going to have a lot of companies that have some sort of relation or business with that area in Eastern Europe. And you have a lot of Ukrainian workers and a lot of the other big tech companies. I think we're going to have a lot of companies to talk about over the next few weeks. Let's turn our attention now to Salesforce. This one is on your radar. Bullish play into the earnings. Tell me a little bit about this one. Into and through, you say.
Yeah, into and through, and it's more of an agnostic play. This is an earnings place, which we don't get to talk about on here very often, but I thought it'd be fun, especially since the way that it's set up. So looking at CRM, the earnings performance has been a bit of a mixed bag. You've had a couple down moves, mostly very, very small in nature, a couple to the upside. So I'm actually doing a strangle swap with this one, which is a put counter and a call counter both at the same time. It models out really well. So that's what I'm looking at there. They're pricing in about a 7 to 9%, depending on the confidence interval you use on implied vol. But I think that you're good probably to about 13% either way on this trade.
The strangle swap. You know, it's interesting. We don't hear that often. Yeah, no, finish your thought,
very
Mike.
often. No, I was going to say, yeah,
and I think that it's important that you're noting it.
Very often. Yeah.
Ben?
Well, this is a stock that's come under pressure similarly in terms of what we were talking about a minute ago in terms of PepsiCo, obviously for different reasons. I think that goes without saying, but price activity is price activity, and we've seen some weakness here. Now, Nicole, you know that I like to look for some kind of a stock or futures or a product to be able to kind of regain composure after some major downside trend environment in terms of what we're seeing here with Salesforce, and we're starting to see that. Now, we haven't necessarily taken out any of the key areas that we established on the way down, but one thing that I'm noting here is the spike down to 181, a little bit of rejection at that lower level. You see a pretty clear V-bottom type pattern forming off that low, but you can also see, again, the price decay, 311 all the way down to this most recent low. We're talking about the February low. So I do want to just move away from the hourly time frame. But here again, the trend environment to the downside. This is the most encouraging aspect in terms of the most recent price activity for the bulls at this point. So I can see why Mike's getting a little bit excited. The January lows, keep in mind, coincide with the late spring, the last area we saw in the spring of 2021. So we're talking April or 2020, I'm sorry. But notice here again that we actually just recently took out those January lows from this year. So that was one of those stocks that has seen some price decay relative to, again, some of the others that we've sort of singled out or set aside from that differentiator, I guess is the best way of putting it, those that have taken out the January lows in February versus those that haven't. And then lastly, as we take a step away from that daily and kind of put some moving averages here on, you can see we're now below the 200-day, which is well above at 252. We're below the 50-day. That's the blue line, up around 226. Now, the one thing I'm noticing here is look at the RSI. It kind of bottomed out recently, starting to work its way up. So again, that's sort of supportive of that bullish sentiment in terms of what Mike is looking at here. And then lastly, I do want to point out the volume's been so far kind of limited here. You do see these spikes that have come into play. One did come in play to the downside there, but even that on the way down, we were seeing lower volume spike highs there. So again, probably or could be signifying that some of that momentum to the downside is stalled, and what the bulls want to see is this RSI really start to regain some momentum through the middle of this range and work its way towards the upper extreme. That'd be reflective of some high conviction price activity.
Yeah, and that RSI is showing a little bit of that, but you're waiting for more conviction. You see the 200-day, you saw the 50-day, and Mike, I know you're focusing on the 20-day even. A final thought there?
Yeah, you know, with this being an earnings play, I love it when you can take one of the inputs out of it, and that input is direction. And that's what really this one's going to do, and it probably, even though right now it doesn't model out as good to the downside, it probably does a lot better because I think this spread that I'm doing it's Vega positive, actually, which is odd going into earnings, but you're actually playing the implied volatilities between the two, and that implied volatility shouldn't come down as much to the downside. So this thing could be really nice in either direction.
Okay, and final thought here, DoorDash, this is one that you're watching, some bullish momentum, looking at an entry point. Tell us a little bit about DoorDash.
Yeah, from the technical standpoint, I really like it. I also like the little bit of the backstory that's been brewing up there that we are close to, and I don't want to say it, but this is in California, that they've applied to have DoorDash be able to deliver cannabis. So that is opening up, as you can imagine, a whole huge thing. Now that isn't done yet, but if it does, or even the real possibility that this thing makes it through a legislature, that can really, really give some legs to Dash. And it's already, you know, it's been beaten up, and it really is now starting to turn that corner.
Yeah, so what do you think here? I mean, that's, first of all, I hadn't even heard too much about that. I mean, now we're getting some big news on DoorDash on that front. A week or two ago, I didn't hear any of that. So, I mean, that's a newer story, could really be a catalyst. Ben, your thoughts?
Me neither. I can't imagine it would hurt if DoorDash could deliver your stash, but we have still seen some price activity to the downside here. And again, one of these stocks that maybe some of the momentum lower has started to slow. We were just talking a minute ago in terms of some of the weakness that we had seen in CRM and that V bottom. Well, here, not as much or as extreme of a V bottom, but you are seeing, again, a move off that 83 low, starting to recover some back up above 100. Now, still sort of in this area of consolidation that you can see that we've been forming basically since the middle of January. But here's another stock, again, that took out the January lows, that has seen some weakness off this 257 high that we saw. This is the beginning, middle of November, I should say, and some of the trend environment to the downside. Investors are hoping that we're starting to kind of form a bit of a bottom. But similarly, again, in terms of CRM, we're seeing potential for one to form, but we haven't really taken out anything significant in terms of some of these areas of consolidation, that staircase pattern to the downside here. Now, looking at the daily time frame, there's not a lot of time to kind of go back to, but hey, that sell side activity that we just looked at off that 257 high, the middle of November, well, that coincides with the high that they saw after their initial listing. We're talking about back in the end of January last year. And then I just want to point out, as we move away from this daily time frame, well, the weekly is going to really pretty much show the same. Here you can see, but take a look at some of the price activity. Weekly bars, candles to the downside, up only 7 since the middle of November. And then here you can see where things stand below that purple line, the 200-day moving average, below the blue line, the 50-day moving average. And again, just notice here the weakness after, throughout the end of last year into the December, January, and throughout February for the most part continued. Now, again, potentially it could be bottoming here, so the bulls want to see this start to take out some key areas, the moving average, the upper extreme of this range that we're in, right around that 120 area, and eventually that would provide a little bit of momentum for them to get this thing driving back to the upside here. But as of this point, we're really just kind of consolidating at this lower level, but hopefully, again, the bulls can, for the bulls, hopefully they can take out that 120 level. The bears want to see it continue. They want to see that momentum take out that 85 level and resumption of that trend environment to the downside.
Final thoughts here, Mike?
Yeah, on DoorDash, actually, putting this together early this morning, this was more going to be one that if we did see that initial move up through, now we're down about, I think it's down about 80 bips on the day. So, obviously I'm waiting for some confirmation of what I'm seeing, but that backstory, I just can't get that out of my mind that, for all intents and purposes, watch your Ubers and Lyfts for that thing too.
Yeah. Amazing job with the charts, Ben, as always. Thank you for that. We appreciate it. Mike Shorr, Prosper Trading Academy, looked at PepsiCo, Salesforce, and DoorDash. Thank you both very much. Ben Lichtenstein and Mike Shorr, thank you for the big three today. Always great stuff. I appreciate it.